The Korean stock market crash, the story every desk is talking about. KOSPI just posted its worst month on record. Today, what it means for the S&P, for the Nasdaq's AI trade, and one oversold name flashing a buy signal, revealed at the end.
Right. Down about 23% this month alone. Roughly 250 trillion won wiped out. The consensus story? AI chip demand got ahead of itself, and Korea's the epicenter. Simple enough, until price moves the other way.
23% in 1 month. 7 circuit breakers tripped. From a peak of 93.85 in June to under 7,000 by the 16th. That's the number driving every headline right now. Samsung and SK Hynix took 9 to 12% single-day hits repeatedly. The trigger, a sudden reassessment of AI chip demand, plus MSCI snubbing Korea's developed market bid back in June. Leveraged ETFs did the rest. Rebalancing turned a sell-off into a cascade.
Here's the Korea ETF. From 220 at the high to 162 today, call it 26% gone. Watch 160 as round number support. Lose 154 and this cascade isn't finished.
Now, Jamie Dimon says markets are underestimating risk. Wouldn't touch stocks or bonds here. Close to as good as it gets, he says. That's the same caution the Korea crash is whispering. Consensus says he's early. Price will decide if he's right. Add Trump comments rattling futures, dragging Tesla and SpaceX-linked names down with it. On its own, noise. Stacked on top of Korea, it starts to look like risk appetite cracking everywhere at once. The S&P sits at 742, barely down. 755 above is resistance, 740 is the line in the sand. Below that, 708 is the 60-day floor. So far, Wall Street's shrugging off Seoul.
The Nasdaq's actually green today, 696. But the AI demand doubt out of Korea is the same doubt sitting under Nvidia and every chip name here. 700's the round number overhead, 687 below is where the doubt gets tested. Quick sweep. Bitcoin's up about 0.3%, 65,400. Ether's up nearly 1%. Risk appetite here, at least, isn't buying the Korea panic story. Yet.
Oil's up 1.5% today, back toward 126. A week ago, the story was Iran deal optimism pushing crude down. Same market, opposite headline. That's the whole game.
Bonds are the one flashing red. TLT down 0.7% as yields push higher. Gold's soft too, down 0.1%. Diamond's bond warning from a minute ago, starting to look timely.
Right, the name I promised you. Oracle. Credit risk near an 18-year high. One desk just cut its target to 110 with a sell rating. Consensus says AI capex is catching up with the balance sheet. Price says something else entirely.
64.8% off its high. That's a brutal drawdown for a company still printing enterprise contracts. Sits at 121.73 now, fresh 52-week lows alongside names like Paramount, Skydance and Tilray this week.
250 was the old high, long gone. 130's the round number ceiling above. But 120, that's the level. Hold it and this drawdown turns into the setup. Lose it and the sell case writes itself.
This is the read on Oracle right now. Oversold, sitting well under both moving averages, heat map flashing cold. Analysis, not advice, but this is exactly the kind of setup the crowd either panics on or piles into.
The crowd here is leaning up, 65% conviction, buy-side skew, despite the sell rating out this week. That's the tension. One desk says 110, the herd says higher. Worth watching which one blinks first.
So Korea's crash, the S&P shrugging it off for now, and Oracle sitting on that 120 decision line. Quick look at Netflix, Coinbase and Adobe tomorrow if the AI story keeps moving. PremiChart's free on the App Store, link below. See you tomorrow morning.